15:36. This meeting has been duly promulgated. Quorum is present, and all is copacetic. And the first item on the agenda is adoption of the agenda. So may I have a motion? And a second. Any discussion? Seeing no discussion, I'll call the question. All in favour? Opposed? That carries. There's no public participation. And there are no prior minutes.
Yep.
There are. They're here. Comments?
I have none.
January 23rd, no.
No?
And January 23rd seems just like yesterday.
Okay, so a motion to approve these, please, and a second. All in favour, opposed, that carries. And
There was no unfinished business because the previous was about...
sorry, I'm still on number 5. Business arising from the minutes. Page 3. What am I looking at here, Shona?
Yeah, sorry, they got put in the wrong spot. So 5A should actually be 4A, and there is no 5A.
Okay, there's no business arising.
Yeah.
Okay, so none of us caught that in the agenda adoption, so we won't change it now. There's no unfinished business, there are no reports, and there's one item of new business, and that is the audit report from Bill Cox.
Should I come to the...
Yes, please, please have a seat. Welcome.
Thank you. I'm sure the throngs of people will be coming in shortly.
Having added all the things up with their abacus and their own lists.
I was so excited that when we went to the City of North Van Council meeting, which was last week or the week before, that they were putting extra chairs outside of the council chamber. And it was full of people. It was great.
But it wasn't for you.
Turns out it was for the public hearing after some cannabis related.
As I say, there's elements in North Vancouver I'm not aware of, and I grew up there.
Well, I can't promise you any more exciting than that, but very pleased to hear what you're going to have to say.
So there's 2 documents to go through. I don't know if there's preference for which one first. There's a sort of summary letter from ourselves, and there's the financial statements. Does it matter which order? It looks like people might actually have our letter.
The letter is first in the package,
So why don't we look at that? And it's not that my eyes are fading, but I need my
It's the poor lady.
Shoppers Red Mark glasses here. One of the problems when you get later in a council term is I'm always worried about how much I'm going to repeat myself from last year, but there are a few things that we need to talk about every year, even if there is a little bit of repetition. And our report is really just a summary of our findings. We've completed our work. I would say we're 99% complete. Purposely, not 100% complete. The last little bit of work happens after council approval of the financial statements. Then we go away, we talk to your lawyers one more time, do a couple of procedures we call subsequent events work, and then we're good to go with a signed audit opinion. But I think we've done enough work that we know it is going to be a clean audit opinion, so we're satisfied that the numbers are fairly presented. One of the things that we do need to talk about every year, our audit standards require that we're transparent on this, and that's something called our materiality level, and this is page 5 of our letter. You don't necessarily need to follow along, but our audit report is going to say, when we sign it off, that we believe the financial statements that are prepared by management are fairly stated, and we use that term fairly stated instead of something like accurately stated, because our job is to be satisfied that those numbers and those disclosures are really fairly presenting the financial position of the village at the end of the year. We're not looking to the dollars and cents. That's what your staff does. We do sampling based on our materiality level, which is, as it says in our letter here, $63,000. So we do sampling with the the goal. There's a whole bunch of statistics involved of being confident that the financial statements are fairly stated, plus or minus this number here, $63,000. Your staff, of course, don't have the materiality like that. They're getting it right to the dollar. We're a higher level overview of that. I did have a question come up at a council meeting earlier this year where somebody said, does that mean if somebody's doing a $30,000 fraud, for example, it's below your materiality, so you're not going to find it? And the answer is no. We use this to set our sampling level. It doesn't mean that we ignore transactions below this level. So any transaction, even a $10 transaction, can still fall into our sampling. It's just that the higher the dollar value, the more likely it is to fall into our sampling. So we don't ignore those little items. Part of that process also is that we have to report back to you differences that we do find during the audit. So as we're doing our audit, we keep track of differences anywhere we find an invoice in the wrong year, or maybe have a disagreement with management on an estimate, whatever the case might be. We keep track of those, and we have to present you with our list of items. There was 2 items that add up to a net total of $5,600, so basically next to nothing. And there was also one adjustment that had no net effect, just a reclassification entry that we proposed be put through the statements, and management agreed and did that. So really kind of a long way of saying very, very clean results. On page 7 of our letter, page 7, 8, and actually 9, all the way to 10, there's sort of little rectangles here that we call our key audit areas. And this, I probably am repeating something I said last year, but the point of sketching these out in our report to you is to let you know that there's certain areas in the financial statements where the auditors spend more time than other areas. Some areas are very easy to audit. You know, we can, for example, for a bank account balance, we write to the bank, they tell us the amount in the account, done. Other areas take more time, usually because there's a high volume of transactions, or there's some estimates involved, that sort of thing. So we've set out those areas that we spend more time on in this sort of table-ish format. I don't think I need to or should go through each item. I have my favorites. The one I always like to point out is the first one, management override of controls. It says, starts with the sentence, management is in a unique position to perpetrate fraud. Always a good way to start a sentence. But the point of mentioning this one is that in any audit we do here, any organization, one of the first things we have to do is get a sense of the tone of the organization, the corporate culture. Is this an organization that is laissez-faire and lets things slide and doesn't really care about following the procedure? And there are some like that, and if that's the case, that changes our approach for how we're going to approach the audit, changes representations we might take from management and those sort of things. So that's important to us in any audit, and we did not find any issues. There were no shortcuts taken. Good observance of all controls and procedures. No issues there.
Bill, do you want interjected questions?
Yes, if you like, that's
So yeah, jump in. So perhaps I can just jump in.
Sure.
On the revenue recognition side, it's always sort of amazed me that we recognize as revenue loan proceeds and grants.
Well, loan proceeds would be just for your budget purposes. In these financial statements, they're not.
Okay, so there is a distinction. So this would be, these are more the financial statements that a GAAP accustomed person,
correct,
such as myself, would understand.
Exactly. Yeah.
Got it.
Exactly.
Okay, thanks. And there was one other one. As a result of the anticipated revenue or realization of asset from 52 Brunswick Beach Road, the road end that we closed. Did you do any sort of evaluation on the balance sheet values of that we're carrying for land and other assets, but specifically land?
Yes, so those assets are carried at historical cost, whatever paid or acquired at. And then there's a requirement to consider impairment, so a write-down, if there's conditions that would indicate that would be necessary. So no impairment has been considered for that.
Okay, so the assets are stated at acquisition cost, and obviously if it's land, there's no depreciation. So when we realize 52 Brunswick Beach Road, I presume that we're going to realize it at a far higher value than it was carried for. Although the land was carried as a lump sum, how do you allocate what 52 was of the original land asset value? In other words, do you even bother? Because you're going to show a gain on sale of asset, presumably.
Yes, they will bother. I'm sure your
Yes.
CFO has that figured out already.
Yes, we basically took, I think there was, might look to Haley for some help on this too. We valued what a section of road, a width of road and length of road to originally set up TCA. I think that's how most people did it when they initially set up the TCA. And then we valued all of, because this was actually a road end, so it was actually a sale of a road.
It was actually a road, yeah.
And then we've done this once before when the piece of land sold a few years ago. We basically took that value, we took the square footage of the property, and then we determined what the value was.
Got it.
And it came in around $65,000. And then we had
So
some
the-
additional costs that we put to TCA as well, the cost of selling the land. So I think the total value was around $88,000. So then when we sell the property, the difference between that and any other
Okay.
selling costs we have will be the gain.
So the carrying cost of land is fictional, really. Most of it will never be
Not sure.
sold, of course.
Not sure if I'd use the word fictional. I think it's your best estimate of what it cost you
Yeah,
originally.
got it.
Originally.
Not what it's worth.
But there should be obviously a healthy gain when sold.
Got it, thank you.
I think fictional is just a way of describing the cost of what it was, how you establish the value, that's all it is. Fictional means, in that term, I would agree with Carl on that one. I think it's something that is dependent on your opinion of what your costs were, not so much always backed up by hard costs, but just
Yes, and that's because the county rules changed in 2009. Prior to 2009, people from the private sector have trouble believing this, but prior to 2009, there was no accounting rule for governments to account for their land and infrastructure, so it was quite a big exercise that Lions Bay and everybody else had to go through in 2009 to account for all these. So that's why there was estimates needed. Since that date, everything else is 100% accurate. Non-fiction, I guess, since then.
Well, I assume that when Lions Bay was subdivided, the developer bought the land from the Crown, and when the time came, turned over the roads to the municipality or to some entity, which we then acquired for free, I assume. Or
Yeah.
nominal.
So the difference there is if you acquire something for free or nominal, it should be attached the fair value at the time. So whatever the fair value at the time was, and that's where this estimate would
Got it.
come from. So,
Okay.
yeah, it's sort of a complicated area, but the point is there should be a nice profit coming. I was close to phoning my bank to see if I could somehow get more credit, and they said no.
Well, yeah, I'd probably make some inappropriate auditing comment, so I won't make it.
So actually, it's 52 Brunswick Beach is one of the areas that we looked at. So we just talked about that. That's on page 8 of our letter. Another item that was of interest this year was the Ecom radio equipment that Ecom forced all its, is that a nice way to say that, suggested and
Required.
required all the participating municipalities to purchase. The reason why it was interesting is we found out as part of this exercise that every municipality treated it differently. There was no real good consensus for how to do it. I think Lions Bay actually did it correctly, whereas others sort of took a shortcut and expensed it all out, did something different. So I think you did the right thing, and probably in fairness to your peers, it was more significant to your budget than
Sure.
it was.
So we recorded as an asset and the remaining amounts to be paid as a long-term or
Correct.
short-term liability.
Right.
Okay. So we have that on the books, that liability.
Yeah, to be paid over 7.5 years, which
Over
is the
7.5
length
years.
of the lease, or the levy.
There's some other items that we list, I won't go through, just areas that we spend some time on, employee future benefits, staff salary, those sort of things are always going to be there. They're significant. Salaries and wages are always a significant part of your expense. That gets me to page 12 of our letter, which is something called fraud discussion. Part of the auditor's responsibility is to make sure that we do consider where risks of fraud might exist in an organization, and part of that is sitting down and doing some brainstorming with our audit team, which we do. Part of that is asking management if they're aware of any issues or concerns, or if there has been any frauds during the year. And we have to ask that question of council. So anytime I'm sitting here, I'm sure I asked the same thing last year. Anytime I'm sitting here, I have to raise it. This is an open meeting. Yes, it is open, so it might not be appropriate to discuss now. But really, the point is, you have my email address in the paragraph there. The point really is that at any time during the year, not necessarily audit time, any time during the year, if you hear something in the community, it doesn't have to be proven, but if your neighbor is saying, I heard something's going on at the works yard or wherever, let us know. Obviously let management know too, but auditors would like to be aware of it. That'll adjust our audit plan, and we'll consider that. So we do have to ask you that question every year, even though it is a little repetitive.
So my question there would be, how would we know?
Well,
Other than neighborhood rumor.
could be neighborhood rumor, could be something you observed, or you asked a question of the CFO. Sorry, can't put you on the spot, because your current CFO wouldn't do that, but you ask a question of the CFO and you get an answer that doesn't seem quite, you don't know why, but it doesn't seem quite right. Just so you know, the auditors are another outlet for you, so we could say, I don't know if there's anything there, but I heard something, and can you please look into it? And we will.
Okay, so I have a concrete example. I've asked the question about how we audit fuel delivery and use down at the works yard, and I was told not to worry about it. So that's not something that I like to hear. Apparently there's a procedure. Do you look into physical procedures, whether they're purchasing procedures, in terms of tendering, bidding and so on?
Yes.
Or how, because every time when I was signing checks, which I'm not now, as you know, I seem to sign a lot of invoices from Super Save Fuels for diesel, gasoline, you name it. So there's a lot of money flowing through the fuel tanks then.
Okay, I'm going to add that to my list.
That's such a frangible commodity, so it's so easy to disappear. There's absolutely no suspicion it's happening, but how do we know?
Good point. There are certainly Pam and Haley will have details, but I know there's some pretty good control procedures over that. Do you want to summarize, or do you want to take that offline? Or,
Maybe take it offline.
Okay, take it offline. But given that it's a concern, I am going to make note of that.
Yeah, it's always with anything frangible, roadbed material, anything that doesn't come in discrete containers, because it falls off the back of the truck, right?
Yeah. Yes, I was going to say that we actually did have a client where at the works yard the guys there were selling scrap metal, and we were able to. They said they didn't see anything wrong with it, but
In some cases, just a procedural thing, yeah.
but it was going in their pockets, so there's
It was going back.
there's something wrong with that. Yeah.
And how did it? So we had a fuel theft last year as well. How does that get handled? That's just an expense, right?
Yep, theft
That
is an
loss.
expense as anything else, as is fraud, actually. We had a local government client, I still remember this, a small local government, no bigger than Lions Bay. And we ended up on their expense, we had revenues expenses and we had fraud expense of $150,000. And that was an interesting council meeting.
Yeah, I guess my question, not so much the financial reporting of it, but do you get involved in suggesting, well, you should get video surveillance, or you should,
To a fuel card.
or whatever it is? Do you make
That's the
those
most
kinds of
economical
suggestions?
way of doing it.
Yeah. Yes, so clearly we don't necessarily have all the knowledge in the world, but one of the advantages of working in a lot of different local governments is we do see what others are doing, and if somebody's implemented a procedure that, well, that's pretty efficient, doesn't cost much, why don't you consider it? That kind of thing you would.
And would that appear in your management letter if you had made that recommendation?
Yes.
Okay.
So, Pam, you'd be prepared to talk about this in camera? I think I heard that first.
No, I think just off table. I'll have to get my mind around how we could address that if it was a concern.
I think it's a good point, and I think it's relatively easily dealt with.
Mhm.
Okay.
Yeah.
It is logged every time fuel is put into either a fire truck or a vehicle. It's logged exactly how many litres, what type of fuel goes into which vehicle every time it's put out. And every year I get the report so I can see how much fuel each vehicle used, each department used.
Yeah, I
So
heard
it's
that,
logged
but
every
who
time.
checks that the right number has been written down?
It'll be approved by the public works manager.
Hmm.
But year over year is a good example as well.
Yeah, that's what I've written down, is that
if-
year over year is a
But we
good
can
comparison.
talk about that offline.
I have absolutely no. I just want to know that there is a procedure and that it's thought through. So
Everybody's right.
I mean,
Just
the
talk about
logging
it
doesn't
offline.
work at all, because if I write down I put in 200 but only put in 100 and sold 100, it's,
Right.
everything still
Two
lines up just
vehicles
fine.
Side by side.
Yeah. Yeah. So, but it's got to be signed off. I like the video.
We have a video.
Okay. Good.
Okay, last thing I wanted to mention in our letter, and it's sort of a nice segue to get there, is our management letter, which is Appendix E, on page 25. This is a letter that we write to your CFO, and we just talked about the sort of things that could go in here. These are comments that come to our attention while we're doing the audit. And anytime we have a recommendation, we pass it on to your CFO. We copy it into this package for council just so that you're aware of some of the things that we're talking about. I think our letter this year is pretty boring, which is good.
Yeah.
We have a couple of points that we mentioned here. The employer health pass, which has been front and center these days. I saw an article in the Sun this morning talking about complaints at UBCM and all sorts of things. So you're aware of that, but it is going to change costs and something that you need to take into account in the budget, and certainly management is aware of that. Expense reports, a recommendation, and staff agrees that CAO expense reports will be approved by the mayor. So that is done, and then we always follow up on points that we mentioned last year. We had a point on bank reconciliations, which I think there's a good response, a reasonable procedure to deal with that. And we also had comment on receipting of revenue transactions that had been a real difficult area in the past. Not big dollars by any stretch, but a real difficult area, and I think your CFO has done a lot of work in tightening that up and getting part of the organization to buy into the overall need to follow process and procedure. So that's a really good news story, I believe, that one. So kudos to that. And that gets us to the end of our comments.
Thanks, Bill. If we just go back to the Appendix C on your page 20, the representation letter.
Yes.
What is this? It looks very much like a cut and paste. Is this from who to who is that letter?
Yeah, thank you. We put this in here just for information. This group of documents here is just sort of all our communication, so that you're aware of it. Appendix C is our auditor's favorite letter. So really what this letter says, and we'll get your CFO and CEO to sign off on this, really what this says, although there's a lot of words here, it says you, staff, CEO, and CFO, have told us everything we need to know, whether we ask about it or not. So it can't be the case where the auditors leave on Friday and management look at each other and go, well, good thing they didn't ask about whatever. Right? This is them formally saying, we've told you everything you need to know, whether you've asked or not. Now, it's, you know, multi-page because lawyers get at it and add points, but that's really the takeaway, that we're asking for representation that, first of all, you management believe everything is accurate, and that you've told us everything we need to know. That's really the purpose of that. And our last procedure is, part of our subsequent events is to get this letter back signed by management.
Okay, and so that will happen
That will happen.
as a condition of you signing the final sign-off on the audit.
You don't get the audit report until we have that back signed.
So it'll be done this week.
Okay, so this is just a placeholder because obviously it's not a board and the date there is wrong, but that will all get
Oh,
fixed
yeah.
when the time comes.
Thank you. We did a poor proofread job. It's supposed to have been customized already. I don't know where we got the word from.
Okay, but this is management's representation.
Oh,
not-
sorry, it should say date of council approval. Yes.
So we will approve this letter before it goes.
No, as soon as when you approve the financial statements, that's when we ask. That's the date. So.
And I signed the letter.
That they'll sign the
But
letter.
not this letter because there's quite a few things that need fixed here.
Thank you. I didn't realize that we had not done a good proofread job. So we'll do a good proofread job, and we'll send your CFO a soft copy that she can print on your letterhead.
Fine, okay. Now, our CFO is acting as our CAO at the moment, that's fine.
Yeah, I signed it as a CFO. I signed this letter even when Peter's here.
Yeah, but Peter's not
Oh,
here.
because Peter's not here. No,
Yeah.
that's fine.
The
That's
girl,
fine.
the girl with two hats.
Yeah, but what I'm saying is this is signed as the CFO. Like even when Peter's here, I signed this letter as the CFO. I'm correct, right?
Oh, it's not
So, yeah.
by both, it's only by the one person, fine.
Because I'm the
got it.
one saying that this is what we've done, and
Yes.
yeah.
Yeah.
Okay. Anything else, council? Let's proceed then, Bill.
Okay, so we got some financial statements to look at, and your CFO and I talked before the meeting and suggested that I would run through with some higher level points. Obviously, she or Haley will have details if you have any big details, but I thought that would make sense. I'm starting on page 3, which is the auditor's report. I don't know if it's numbered differently in the agenda.
No, we've got it, the page is on the bottom.
Yes.
Page numbers on the bottom, it says.
I won't read this. This is standard wording. This is a clean audit opinion. I mentioned already why it's not signed. So this will be signed once council approves the financials. We get that letter back we just talked about, and we talk to your lawyers one more time. Then we'll sign this off. But it will be a clean audit opinion. Page 4 is the statement of financial position, and what I did is just sort of circled some of the items that I thought were worth mentioning, and usually what I find I do is there's 1 or 2 or 3 things on a page that are unusual or have changed from last year, or whatever the case may be. This time I ended up with 7 because there is actually a lot of unique things that happened this year. So I'll just run through some of these comments, and if I missed anything, you'll
Okay.
let me know, and if I say anything wrong, we will correct. I always start this page, statement of financial position, which is different than your income statement, which relates to your budget. This is a snapshot of where you were at the end of the year. It's equivalent to a balance sheet in a corporation, but it looks different because you have to follow these public sector accounting standards. And one of the ways it looks different than a corporate statement is it doesn't balance to anything. It just comes down to a number that says accumulated surplus. And I'm sure I've said this before because I say this everywhere I go. The biggest takeaway is you cannot spend that accumulated surplus. It says you got $21 million. I always hated that terminology, surplus, but you have to use it. That's what the standard says. Because surplus, to me, sounds like it's surplus. You can spend it, but you
It's owner's equity, not.
That's exactly right. Note 10, which is a few pages forward, does a good job of breaking that down, and I think makes it clear that you can't spend it. Note 10 is on page 17. The largest item by far there is something called invested intangible capital assets. So that's money you've already spent on infrastructure. So it's spent, it's in the ground. That's why you can't. There's nothing there to spend. The reason why it ends up in the owner's equity is because you expense that over the life of the asset. So you spent the money, it just hasn't been expensed yet. Also in that note you see the reserve funds, $848,000, and unrestricted amounts, $1.1 million. So that's really, the $1.1 million is really the money that you have to spend, even though you do need some working capital. You can't spend all of that, but that's got less strings on it than the money you've already spent, obviously. So I would
Just
think-
remind me there, while you're talking about the surplus, why do we put the gas tax money into a restricted reserve, Pam?
Because it has restrictions on it. There's certain things that we use it for, and it is a requirement of the gas tax funding that it go into.
That's
its
what I
own
thought, but
reserve.
it says here, unrestricted funds. Second last line on page 17.
But it's in the restricted funds, is
Yeah.
it not?
It is, I presume it went into the
Yeah.
restricted funds.
Like I'm explaining the difference between the reserve funds, which are restricted amounts, and the biggest difference was the putting in the gas tax there.
Yeah,
Plus
but it says the
interest.
receipt of $56,000 of unrestricted funds for gas tax funding, but it's in fact restricted. But it's self-restricted, isn't it? We have determined that we're going to save that for roads, or is that restricted by the government?
It's in between.
Yeah, I
So
was just
the-
going to say it's
Yeah.
an unrestricted restricted reserve. We're unrestricted in how we can use it, but we have. Sorry, I'm speaking in.
No,
But we
that's
have to
right.
put it into its own reserve, so it's restricted in that way. Like we have a gas tax, and I have to do reporting on that every year, showing what we've spent it on. If we haven't spent it, I have to allocate interest to it. So it's restricted, but the gas tax funding itself is fairly unrestricted. Like we don't have to use it for one specific thing. They're pretty generous in what we can use it for.
It's
But
like
it's-
resident for tax purposes, but ordinarily unresident but resident.
That's
But it's-
A status I've
That's a good
It's
analogy.
restricted by our policy.
There-
But the
there
gas
are-
tax
The
funding.
gas tax, yeah, no, but that's the
Yes.
portion of it that is restricted by our own policy, saying we're gonna use it for,
With the gas tax, it's a
Yeah.
restriction of actually getting the funding. We are required to put it in a separate
Yeah.
reserve, restricted for use of things defined by the gas tax, but they're quite unrestricted in what they let us use it for.
Got it. Okay,
Is that-
it's a nice thing.
Yeah,
Didn't even apply to
restrictions.
that.
There are restrictions on it, but they're very general. Whenever UBCM did the negotiation last time, 2 years ago or 3 years ago, they really got a much better deal.
so
it can almost- it
unrestricted,
can almost
restricted
be-
reserve.
Yeah,
Yeah.
it's,
You just have to use for capital.
Yeah, I got it.
I'm learning new things. Unrestricted, restricted reserves, and fictional accounting. That's all.
Yeah, you actually didn't agree to.
Come see us more often, we'll give you all sorts of new buzzwords.
So back to page 4. So accumulated surplus. Remember, you can't spend it. There's another line here, sort of 2/3 of the way, or maybe 3/4 of the way down the page, called net financial assets. That number is 228,252 this year. This is another line that you don't see on a corporate statement, and it's somewhat equivalent to working capital, which corporations might use, but not quite. It's simply a calculation of financial assets, which are at the top of the page. Financial assets are anything that are cash or will turn into cash, so cash and investments, accounts receivable. Liabilities are everything you have to pay out, of course, and the net difference is net financial assets. And the standard setters at public sector accounting boards say that's a good indicator. That's something that governments should track. So that's gone down significantly from last year's 689,000 positive position to 228. But I would classify that as a good thing when it's gone down. What's happened, and we'll see, or maybe we should flip ahead. If you flip ahead 2 pages, there's actually a reconciling statement that I usually describe as a statement by accounts for accounts, because it's a difficult one to make sense of. But what it really does show are the second and third lines there. It says acquisition of tangible capital assets, 1,788,754, and right below that is amortization of tangible capital assets. So amortization is writing off those old assets that we've already spent, but we haven't spent them in the accounts yet. And acquisition of new assets is a good thing. It takes cash, of course, but it's a good thing to be refreshing the infrastructure. So you had a big spend this year, as you know, $1.8 million. So that eats into your available financial assets. You have to cash those in to spend, but it's a good thing to be refreshing infrastructure. So even though on page 4 that net financial asset number's gone down, I still think that's the reason it's gone down is for a good reason.
But it does mean we have less money for a rainy day, should the rainy.
But it does, yes.
So that's sort of our net cash.
It's sort of like if you shut this place down today, collected everything in, paid off all your creditors, that's what you have left over.
Actually, I get in more traditional working capital method on this. I just knocked off the long-term liabilities, and our working capital's improved.
Yeah, so I do look at the accounts payable and accounts receivable. The AP is significantly higher. Is that just because we're holding on to our cash as hard as we can, Pam, or?
It was a couple things. A lot of it was timing. We had a very large
Yeah.
check run early in the year, but it was for 2017 expenses. And what else? There are a couple of things here. And we did have a fairly large GST amount in there. We owed, it's above and below, it's accounts receivable and payable, but we had to self-remit on the land sale. So $38,500 of GST we had to remit, but then we were also able to claim an ITC. So it's actually one of the reasons the receivable is a little bit higher, and it's why the payable is a little
Got
bit
it.
higher.
Yeah.
So, but it is essentially timing. It's depending on when you run your check runs.
So
before the end of the
nothing
year
you're
or-
concerned about, and do you guys look at the cash flow around AR and AP?
Yes,
Yeah.
that's actually a big part of what we do is making sure things are in the right year, because there's so much effort that goes into the budget and tax rate setting that sliding amounts around between years would be a big no-no, and something that we look at carefully. So we call it cutoff, but that's an important issue to us. I think sort of by default we've talked about a few of these other things. We talked about the cash and payables. I guess this won't be a surprise to council, but long-term debt, which you see in note 5, of course, has gone up as part of that capital spending. And last couple of paragraphs in note 5 highlight the new debt in the year. So that's not a surprise, but you certainly see the results on the statement of financial position. And I think I might have seen, the other thing that I circled was deferred revenue, which is note 2. That is a little higher than usual. And if you look at note 2, you see the big change there is something called government transfers, which are government grants. It's the terminology we use for government grants. And those are deferred until spent. So until we spend it, we haven't met the term of the grant, so deferred until spent.
So the details of that, the big one is we had an advance of the provincial portion of the Clean Water Grant of over $700,000. So we could only recognize the amount we had spent, which wasn't a lot. So we had to defer $600,000 of it.
Recognize it as revenue.
Yeah. So
Yeah.
basically we couldn't recognize it as revenue. So
Yeah.
that's why the deferrals went up so much.
Got it.
So that's the biggest one. And the contributions for future use for the insurance proceeds for the trailer. We got an advance payment, but we hadn't spent all the money by the end of the year. So we just deferred it. So it's just pushing it in to recognize it in the year that we'll actually be incurring the expenses.
So you're okay with that?
But as a matter of fact, the insurance one we had a little discussion on, because if you didn't have to replace the asset, we would say, well, you gotta, then that's revenue right away, but it was pretty clear that it could only be, proceeds can only be spent on, replacement or.
Replacement of the assets.
Yeah, so we owe it back if we don't do
We
the
owe it back
replacement.
if we don't.
But shouldn't it have, it was 2017, so it went
Yeah.
into,
We received it in 2017, but we're recognizing some of it in 2018 because that's when we'll be incurring the expenses.
because you won't actually, even though the debt, the liability was incurred in 2017, it was as a result of a fire that happened in 2017, why are we booking it in 2018?
Because you don't get it unless you spend it.
And we
you
hadn't
you
spent
haven't
it yet.
spent
So the active thing is actually the replacement of the trailer.
They were
not the
actually
loss
very
of the trailer.
generous. At one time when I was trying to prove to the auditors that it was legitimately deferred, I was joking with Haley, I wish they hadn't advanced us so much. They gave us almost the whole claim and then just said, we just have to let them know how we spend it. So we still have another 20, and we still are owed more of the claim as well. I'll put that claim in as a final report.
Okay,
So it's just, sorry, I was just saying it was unusual circumstances, but it was significantly higher. That's probably the biggest change on the balance sheet is deferred income was always very low and then,
Yeah, so the net change, when all that comes out in the wash, is that our owner's equity went up 700,000. And that's as a result of?
well, that's the next page. Page 5 is, shows you the ins and outs there. So there is a requirement, and you'll remember this from looking at statements in the past, there is a requirement under the public sector standards to show 3 columns. The first column is the budget, although we call it financial plan because it's a little adjusted. Financial plan, middle column is actual results for 2017, and the right column is the 2016 comparison. The financial plan, the budget column, the first column can always be a little confusing because you'll see it says, the third line from the bottom, it says you're budgeting for an annual surplus of $5,594,221, and you're going to remember having passed a balanced budget. And that gets to, you were talking earlier about the debt proceeds as revenue. That gets into the difference between budget, which is on more or less a cash basis, and accounting, which is on an accrual basis. So note 8 explains how we get from a balanced budget to $5.5 million surplus, and you see some of the things that you have to budget for, like capital expenditures. You have to budget for those. You need the cash to spend on them, but they're not expenses because we write them off over the term of the life of the asset. Repayment of debt is similar, and any transfers to or from reserves or surplus also are not revenue or expenses for accounting purposes. So it ends up in a position where the budget looks quite different from the accrual-based financial statement, so that note reconciles it. It's also one of the reasons why, for accounting purposes, you're almost always going to see local governments having a surplus for the year. Because you expense capital, it's written off over the life of the assets at, if you bought something in 1961, probably didn't cost very much, and you're writing that off, and now you're replacing it with assets bought in 2017, 2018, a lot higher price. So for that reason, you've got to raise funds at a higher price, and you're expensing the old stuff at a lower price, so you're almost always going to end up in a surplus position. I find sometimes I've had discussions with taxpayer groups at different municipalities trying to wrap their head around that, because they're like, why every year there's always a surplus at City Hall? What are they doing with all our tax money? But that's really one of the reasons why you're always going to end up with a surplus.
Just run that by me again, because of the difference in
So-
amortization versus CapEx.
So we're writing off assets we bought in 1961 or whatever year. Well, I guess in Lions Bay it couldn't be because you didn't exist in 1961. I existed in 1961, that's why I came up with that year.
Yeah, I've been amortizing ever since.
So you're writing off those old historical cost items at old dollars. You've had all these years of inflation since, and so when you replace it, you need to raise the cash much higher value, so the replacement cost, what you have to pay, is a lot higher than what you're expensing.
Yeah.
For that reason, almost always, not just here, any local government, almost always needs to be in a surplus position to have that cash to do the capital.
But does this 712 surplus mean that we did $712,000 better than we thought we had budgeted for?
Well, so the budget was actually, the budget's,
Restated budget.
almost said misleading, but definitely not fictional. One of the large items you see there under the revenue is the budget for the gain on disposal of tangible capital assets. So
Yeah.
we were talking earlier about the land. So you're budgeting 3.2 million, and that hasn't happened yet. So that's a huge variation right there.
Yeah, so I'll call it fictional because that was all predicated on that land transaction happening, which it didn't. So that was in and out. But the actual numbers are
Well,
712 surplus.
Yes, yeah, so you did not get the proceeds on the sale of the land. You also, and you can see this on the next page 6, you also had budgeted for acquisition of tangible capital assets, $4 million. And that didn't happen to that degree because the money wasn't there. So you see both those things sort of understated for that reason. So that makes this year probably has the most differences and unusual items for any year in recent memory that I can think of.
Well, that's going to take some explaining, Pam, when somebody asks you. What happened to the $800,000 that we had to take out of reserves to pay for the land that we bought at the end of Brunswick Beach Road? How's that reflected?
It's really kind of flow through reserves, isn't it? I mean, it was sort of, the idea was when we sold the 52 Brunswick, that money would
It's
be used to
gonna
pay
go-
for the
it's gonna go
land. So we
back.
sort of taken it for now from general surplus. So it's all sort of flowing through the note
You
on the
don't
reserves.
actually see it right
Yeah.
on the statement because it's sort of in one pocket out the other pocket.
Well, we gained land and we lost cash assets. So, yeah, that's both above the line on the balance sheet. Okay, so got it.
But other than, so the whole land sale not happening really makes the numbers not comparable to the budget. But other than that, things are really pretty close, with the exception of government transfers. And government transfers, again, that's grants and capital grants. So it depends where you are in terms of spend there. So there's often going to be a variation there. But other than that, the other revenue items are in line. The expenses all in line, all less than budget. So that's good. So it really was a reasonably close to budget year, except for the capital and except for the land sale.
Yeah, although I'll just point out to council, we did better in everything. With slightly more sale of services, slightly more other revenues, slightly less water department expenses, slightly less sewer. Well, that was sort of spot on. Slightly less. I mean, every time we're making $100,000 more than we thought, which is just tight management. Excellent management, in fact. Yeah, so I mean, all the other stuff is a wash, the top and bottom. So I'm
Yes,
fine
yes.
with that. Okay.
No, I think it's a good year. It's just a year that takes a little explaining because of these unusual
Yeah.
unusual things.
Although I don't need to tell you that in a government business, that means we tax for money we didn't need. Of course, we didn't know it at the time, and it does just go into surplus to keep our powder dry. But had I my druthers, I think we would all have preferred not to tax quite as much. But
True. There's probably a little bit of conservatism that you need in any budget, and this is, in my view at least, this is pretty close. I think.
especially the top two revenue items. Pam, could you not have gotten them closer?
Well, the one leads the other. In that case, the budget actually dictates what the actual is, which you'll note tonight.
Well, you missed
when
the
we
one by
adopt it.
$40 in a million. Man alive.
Sorry.
I think myself that probably 40% of the issues that we deal with from past councils is because of people trying to be frugal and not adjust and not have enough funds set aside to do these things. And so Unfortunately for us, we're in the spot of having to be responsible about it, and that's how it comes out. And I don't think it's avoidable. I think everything that's here looks like we're being as frugal as we possibly can, considering what we have to do.
I think you're right. I think you always want to be in a position where you know why you're
Yeah.
at, where you're at. So if taxpayers are ever asking why we have surplus, you want to have an answer. You don't want to say, oh, I don't know. But if there's an answer, if there's a plan for it, and there are some future costs coming, as you well know, so that's good. I don't want to overstay my welcome.
You know, you're very welcome as long as you want to stay here, but I think we're getting close to the end.
Yeah,
And there's one or two things we'll want to discuss in closed as well, so.
Okay, I was just going to point out the cash flow statement on page 7, because this, I always like the way this, even though there's a lot of lines here, I always like the way it sort of summarizes what happened in the year, because we break this down into different sections, each with a subtotal, one called operating transactions, capital transactions, and financing transactions. So what this statement says is that subtotal in the operating transactions, so that's the main operations, that's collecting the utilities and collecting property taxes and paying your general departmental expenses. That generated $1.8 million cash this year, 1,810,880. What did we do with that? Well, we acquired some infrastructure right below that for $1,657,000, and then in the financing we paid off some debt, $36,000 and $86,000, and then we also issued some debt to pay for the infrastructure, $605,000, and overall had an increase in cash of $636,000. So I always think that's a sort of a good summary of the major activities for the year, just looking at that statement. Cash is kind of real. When you look at the accruals on the income on the balance sheet, it's harder to read sometimes, but cash is real, and this tells you where it came from and where it went. After that, we have notes. I'm sure nobody wants to go through these in too much depth. They're mostly the same format as last year. We talked about some of the items like the long-term debt, the new debt. We talked about the budget note. I always think in any financial statement, you should read a note called contingent liabilities and commitments. So that's note 7 on page 15. This one happens to be particularly boring, but I think anytime you're looking at a statement, that's sometimes where some interesting things can be hidden. If there's lawsuits, for example, or you signed up for a whole bunch of things to do in the future. This one doesn't tell you anything very exciting. They're all normal things that local governments have to be involved with, like the Municipal Insurance Association and ECOM and MFA, those sort of things. So this is boring, but I still think it's a note that we should make a point of reading each year. And I think that's going to get to the end of all the...
I'll just point out in that contingent, it's now Metro Vancouver Regional District. They've officially changed their name.
Oh, that's true, yes. They were operating under it before, but now they are.
Yeah, that was sort of,
now
they were fudging it for about 3 or 4 or 5 years, but it's now officially Metro.
Yeah, we better fix that. Sorry, that probably went on a little long, but I think I covered all the things I wanted to say. Ms. CFO, anything else we should be
No.
pointing out?
I think of anything.
Okay, thanks, Bill. We'll have 1 or 2 more questions in the closed session, but for now I'll ask for a motion to receive the report. And a second. Any further discussion? All in favour? Opposed? That carries. Thanks again, Bill. So let's just return to the agenda. And that is public questions and comments. Haley, anything you want to say? We'll go to motion to close under 91C, G, and L. Can I have a motion? That's a motion and a second.
Second, if we're going to talk about third parties, is that covered in those 2 areas?
Third parties, council strategy committee meeting or a main committee main council meeting?
You mean now? I think
I
we
mean
may
now.
have to add. Do you have the reasons for closing?
I've got the reasons.
I don't think it's a strategy.
What do you need it for, Ron?
I don't want to put that on the spot in public. It's not about personnel.
So
Litigation? That's G, we've already got that.
Oh, I don't like
It's
that one.
the-
Labour relations, we've got. Security of the property of the municipality, no.
Nope.
Personal information, no. Personal information, no.
Yeah.
Litigation, administrative tribunal, definitely not. Negotiations, related discussions
Yes.
respecting the proposed provision of a municipal service that are at their preliminary stage.
So what number is that?
K.
Yep, I like that one.
So
That's
we'll
very
close
broad.
on K
Thank
as
you.
well.
So K as well. So let's have a motion in that regard and a second. Any discussion? All in favour? Opposed? That carries. Okay, so we'll close the meeting now. Okay, resuming the meeting at 5:15. Having come out of closed session, matters were discussed in that session pertaining to the reasons for closing it. And with that, I'll ask for a motion to not adjourn, to close the meeting. Is that, no, close is when we,
Come out of,
what do we call it?
coming out of closed session.
Session of the.
Coming
No,
out of
no,
closed
this is now the open session. We've come out of the closed session.
Coming out closed.
What do we do when we kill a meeting? End a meeting, stop a meeting.
Look at the minutes.
During the meeting.
I have to see. Adjournment! That's what I was looking for! Motion to adjourn. Second, all in favour, opposed, carried.
Done, we're adjourned.
All right.